ETFs, and particular BlackRock. The ETF market is a very, very, very interesting development when it comes to Bitcoin. And there's lots of nuance to what it actually means, in my opinion. But the really short story is nothing beats Bitcoin in self-custody. So if anyone out there is considering buying Bitcoin via an ETF, ask yourself the question, why am I not doing this myself? And if you don't, you miss what is essentially one of the superpowers of Bitcoin, which is the ability to self-custody. So you can take this digital asset, you can put it in a place that only you can control, and it can't be taken from you, and it cannot be debased on the back end. So it's a reduction of counterparty risk for the store of wealth that has never been accessible to humans ever before. It's an extraordinary innovation, and by not asking that simple question, can I do this myself, or why am I not doing this myself, then you're missing one of the superpowers of Bitcoin. Let's move aside from that and have a look at what you can actually do otherwise and why people are doing this. So I got sent something this week that was BlackRock in full Pac-Man mode. So if you think about Pac-Man, that old school computer game, there's that thing coming along, just eating everything, right? The BlackRock Bitcoin ETF called IBIT had inflows, which is basically capital coming into this ETF, of $800 million in a day. And the tweet had maybe 20 different dates, and it was, because it all has to be transparent, right? So exactly how many dollars are coming in and how many Bitcoin are being matched against that. And BlackRock take a fee for essentially what's like a securitization process on top of Bitcoin. And due to the regulatory environment for a lot of investors and the funds that they run, whether they be high net wealths, whether they be insurance or pension funds, hedge funds even, they've taken money from people and they've been given a remit to invest it in a certain way and in certain things. And so a lot of these people, and this is why you hear the phrase like the retail market has been able to front run Wall Street. What that means is that there's a whole community of funds under management out there, professionally managed in regulated environments, that actually stops them from buying Bitcoin in self-custody. And it's hilarious in some ways. Like I personally, Jake, I have front run Wall Street. And it's not just Wall Street, right? It's the city of London, it's Frankfurt, it's Sydney, it's Tokyo. It's all these massive financial hubs that literally have regulated themselves out of owning Bitcoin in self-custody. So when you see the inflow stat, it's like, wow, this is dollars coming from somewhere, other assets, presumably, and coming into Bitcoin. This is additional demand. Now, what I'm very dubious of is the counterparty risk. So if you own an ETF, you pay dollars for it, and you've got Bitcoin exposure. Great. So for a lot of these fund managers or financial advisors that weren't previously able to get access to Bitcoin for their customers, they can now do it. And we're now May of 2025. A lot of these products first came out very beginning of last year. And in some ways, like the Bitcoin price last year reflected that, right? All this additional demand that flew into Bitcoin. And we saw all-time highs last year much quicker than we expected. You're like, whoa, that was fast. But what's happening now is it's just more money coming, right? More money coming. And as of right now, we're sitting at circa 110,000 US dollars a Bitcoin. We entered price discovery again for the first time in a few months, i.e. the price broke out above the previous all-time high for a period of time. And I mean, this is magic to me. This is, as a Bitcoin advocate, as a Bitcoin holder, as someone who's adopted it as a savings technology, it's like, this is what we've been waiting for. It's like, come on, let that price run. Now, of course, we can speculate, like, where's it going to go, on what timeline. Anyone that predicts price and time is basically going to get it wrong. Always try to remember this idea that, all models are wrong. Some are helpful, most are dangerous. And so I like thinking about this kind of stuff on a much more macro level. It's like, okay, digital scarcity has been created for the first time, and that is Bitcoin. And Bitcoin is a representation of that we've never been able to use before. And I've discussed in the past something called a Veblen good. So if you think about a Gucci handbag, and there's only 5 of them in the world, and actually there are people out there that if it only costs 20 grand, they'll be like, whatever. But if it's 200 grand, then they'll buy it. I.e., the demand and price, the price goes up instead of down. And you're like, whoa. So as the price gets more expensive, the demand increases, which is the inverse of what a normal supply demand curve would do. And Bitcoin's the same, right? So at $110,000, the same demand, you're seeing these inflows into BlackRock coming through. And it's like, well, there's no more Bitcoin, right? The supply is capped. They cannot increase that. And so for the first time ever, you're getting this scarce asset matching inbound demand. And of course, the price action is to the upside. It's very simple. There's no more supply, and therefore price goes up. But what I think will start to happen, and you see that the big asset managers talk about this kind of stuff. It's like, yeah, Bitcoin's a $2 trillion asset, but the bond market is hundreds of trillion. So they can actually shift in size through the bond market. You just can't physically do it in Bitcoin because it's too small. So there's all this money sitting out there that's going, okay, I currently own a bond. It's got a fixed yield for a 10-year period. The real rate of money inflation means that I'm actually getting back less purchasing power, and it's a shit investment, essentially. It's like, why would you give someone your money, get paid for it over a period of time in which they can print more of the bits of money you're getting paid in? Like, doesn't make sense. And even, I won't bang on about this, but like the idea of a negative interest rate is completely insane. Anyway, these ETFs, they're an interesting representation of demand for Bitcoin that isn't actually able to access Bitcoin itself. And that to me is fascinating. Okay, cool. So there's all this money out there that would like to own Bitcoin but previously couldn't. And maybe they've got a bit of a taste for it, and they're coming back. But what are my fears? Well, my fears are, as I touched on before, the counterparty risk. Like, what happens when those dollars that were paid for all the Bitcoin, there might be some kind of government overreach, right? And this happened before in the 1930s in the US. Like, gold was confiscated by the government, and you had to hand your gold in. Anyone out there that tells you, oh, they'll never impound all the Bitcoin that BlackRock have, like, it's happened before, and it will happen again at some point. So would that be a nice situation to be in? Imagine you've gone and put a load of money into Bitcoin, but you did it via an ETF, via your financial advisor, and suddenly you've made all these amazing gains in dollar terms, but it's like, oh, well, I want my Bitcoin now. They're like, sorry, guys, we've actually got a government mandate here, and we're going to pay you out in dollars for all the Bitcoin that you own. So you'll get the dollar return, but we're actually going to keep that Bitcoin. And they just printed more dollars than you can physically ever imagine. So they get it for free. For a period of time, they're going to scoop up the scarcest asset that's ever existed. And then you're left with dollars that buy less shit in 2 days' time, 4 days' time, 6 days' time, 6 months' time. So I'll come back to where I was at the start, which is, if you're thinking about getting exposure to Bitcoin through an ETF, ask yourself, why can't I do this myself? And if you don't have a good answer for that, then you really need to think about how to study and self-custody Bitcoin better. I've done it myself. Yes, there are hours of research. Yes, there are times you're like, ooh, I hope I haven't got that wrong. But I now have an extraordinary sense of peace and calm when it comes to the safety of my wealth, because I'm like, cool, it's in Bitcoin self-custody. It's almost impossible to get. And that for me is an incredibly powerful thing.